Market mood today being determined by two news items. First up, of course, is the Indian government's decision to slash excise duty on petrol and diesel by 10 rupees a litre. This is coming again amid the global energy shock which is witnessed and is sending oil prices soaring high. The government has decided to cut petrol excise duty from 13 rupees earlier to 3 rupees a litre now. Meanwhile, diesel excise duty has been cut from 10 rupees earlier to 0% or nil right now. And these are the visuals that we are getting from various parts of the country, from Hyderabad, Indore, Nagpur, Jalna and Jorhat, where you could see, in fact, in early morning visuals today of vehicles lining up to get their tanks fueled up. Remember, this was in the wake of Naira Energy hiking fuel prices yesterday by as much as 5 rupees a litre, sending some sort of panic buying across the country, where users of automobiles fearing that other OMCs or oil marketing companies may also hike prices. Visuals coming from Indian Oil and other petrol pumps, where people are queuing up to get their tanks in their vehicles refilled. Meanwhile, the Indian stock markets not reacting positively at all to the excise duty cut. In fact, if you look at the heat map right now, most sectors continue to be in the red this morning. Fears of fiscal deficit ballooning are likely to rise with this cut in excise duty. And of course, the other news item also comes from Goldman Sachs, which has cut India's growth estimates for the equity markets and has downgraded Indian equities from overweight to market weight. Let's put all this in perspective with Kranthi, Bathini, equity strategist at WealthMills Securities, who joins us this morning. Kranthi, good morning. Pleasure having you back with us here on News 9. First up, these two big news items coming. First up, the government has decided to cut excise duty on petrol and diesel. Markets not reacting favorably to this, but overall, is this likely to be good news for oil marketing companies and for consumers at large?
Yeah, this is beneficiary for consumers, Kartik, in the medium to short term, because the rise in the global oil prices, the government is going to absorb the customs duty, and that is the import duty, where that will increase the current account deficit for the government in the medium to short term. But this is a good news for the consumers because the rise in the global oil prices will be adjusted by the government in the medium to short term. But how long? That is the greater question at this point of time. Of course, the kind of volatility we are witnessing in every asset class, it's not only the crude, we are witnessing the same kind of volatility in the gold and silver and equity markets we are witnessing every day. So the world is moving in a very different direction. A lot of volatility and uncertainty is looming. That's what we are witnessing at this point of time, Karthik. But we need to remember one thing. We have witnessed the global crude oil prices hitting around $145 per barrel in the year 2007 and 8. We witnessed from there the slide also we witnessed,
That's
and
right.
during COVID we witnessed the crude oil futures going to negative. We never expected we will witness a crude oil prices going negative. So we
Yeah.
are witnessing these kind of a highly volatile moments in the last few years.
Yeah.
So we need to prepare as the world is taking a reset at this point of time, Karthik, at this point
Absolutely.
of time.
Right. Let's stick to this for just a moment longer. Kranthi, is it fair to assume at this moment that with this excise duty cut, there isn't going to be any passing on higher fuel prices to the consumers, which means that worries of inflation, at least for now, can be kept aside, and hence India's sort of overall consumption story, GDP growth, unlikely to get negatively impacted, at least for the foreseeable future?
Yeah, but still one of the worrying factor across the globe, there is no exception for India with respect to the inflation worries are concerned, Karthik. It is the global worry at this point of time. But coming back to India, of course, the consumer have some kind of a solace in the medium to short term. But how long the government could able to afford to absorb this increase in the global crude oil prices, the under recoveries? We need to wait and watch. But as long as the crude oil prices are not inching up higher, for the markets are concerned, the at the fuel stations, that can be some kind of a solace for the consumers. But I don't think so. At some point of time, the government need to take a step to increase the prices in the medium to short term.
Right.
How long? We need to wait and watch.
Absolutely. And how do you see markets reacting to this news? Are markets, are investors largely bullish on the fact that the consumption story, at least for now, could remain intact? Or is there some sort of fundamental departure from the government's overall deficit targets, both fiscal deficit as well as current account deficit, and hence some sort of investors getting spooked out?
Kartik, India is the key beneficiary of the global low crude oil prices in the past 10 years. But the narrative has been changing. The question here is how long? Whether the global crude oil prices are going to be at a higher level, at
Yep.
a elevated level for a longer period of time, or this is just a short-term blip is the greater question. If at all it is a short-term blip, then we are in a much favorable condition in the medium to short term. But if there is a elevated global crude oil prices at a much longer period, then medium to short term, that pressure the economy has to face in the medium to short term. But by and large, Karthik, of course, despite of the chaos that's taking place at this point of time in the Middle East, but there are enough supplies, there are enough global crude oil reserves, and the crude oil demand has been subsidized by the green energy and flex fuels are concerned, alternative energy fuels are concerned. But adaptation has taken time in the recent past. The adaptation has taken a slower lane in the past few years. That's where the key concern for the economy at this point of time. But I believe these are the very short-term impacts. In the long term, we are much favorable stage in terms of the global crude oil prices are concerned. Once this chaos get over, everybody crossed the fingers. I am also crossed my fingers how long this turmoil is going to be exist. It's taking twists and turns every day. And just few days back, we witnessed crude oil prices coming down to 90 also. Again, we are back above 105. So high volatility taking place at this point of time. But on a longer term basis, I'm quite firm and believe the global crude oil prices are expected to come down once these Strait of Hormuz things get eased in the coming days. But when is the greater question?
Absolutely. When is the question which everybody wants an answer to, and nobody unfortunately has that answer. Moving on now, Kranthi, to another piece of news that emerged yesterday, which is again casting an ugly sort of red texture to the Indian stock markets. In fact, I'm looking at the Nifty 50 now, and you have pretty much a sea of red, and this happens to come by way of Goldman Sachs. And Goldman Sachs has downgraded Indian equities from overweight to market weight. It has slashed the Nifty 50 target by as much as 14% for this calendar year to just about 25,300 odd levels from as high as almost 30,000 levels, which was the forecast earlier. Meanwhile, the earnings growth, Kranthi, has also been cut to just 8% from 16% earlier, with risks, of course, like you've been saying, continuing to be the high oil prices and the low earnings expectations. And then, of course, there is the adverse AI impact, which has also been factored in. So overall, markets not taking kindly to, again, what Goldman Sachs is saying. And of course, the few overweight sectors that continue to be held by Goldman Sachs are banks, energy, telecom, and defense. But consumer durables, auto have been downgraded to market weight. And of course, oil marketing companies have been downgraded further to underweight. Now, a report like this coming out at this time, obviously spooking investors at a time when FII outflows have, in any case, been pretty much at record highs. What does this mean for India?
Definitely, it's quite negative in the medium to short term, Karthik. I get surprised if they are not downgrading. But it's a tendency of the global rating agencies, research houses, and all. Okay, just few years back, we have witnessed the Goldman Sachs and JP Morgans of the world upgrading India's Nifty targets. They used to give the Nifty target around 26,000, 25,000, and the market used to hit within a month's time. So that was the bullish mode. Now we are turning into the bearish mode as the global crude oil prices are unstable and they are inching, skyrocketing in the upward trend. So definitely some kind of a concerns. But India's domestic story is quite strong. Certain amount of the domestic consumption will not reflect in the statistics. That is the one benefit for the economy, and sometimes it is one of the key concern for Indian economy. So
Absolutely.
by and large, still, despite of these downgrades, we are still the fastest growing economy in terms of the GDP growth is concerned. Everybody have their concern. China have this concern. Japan have this
No doubt.
concern. So the whole global world is at a turmoil at this point of time,
Right.
Kartik. It's not exception to India.
Absolutely
And
right.
the US inflation also expected to rise in the coming days.
Right.
Yeah, everybody crossed the fingers to witness when the global crude oil prices are going to cool off.
Absolutely, and nobody knows when those prices are going to cool off. But I think the worry for retail investors is that, okay, there is a war on in West Asia. It is the business of, of US, Israel and Iran to somehow find a solution to when those hostilities are going to end. But for the retail investors sitting here in India, looking pretty much at their wealth getting eroded, and let's pull up those numbers as well. Looking at their wealth getting eroded on a day-to-day basis, and even looking at the markets today, I think tomorrow's dashboard is going to reflect a very, very ugly red to investors. What should investors do? Because there are, of course, some investors who may have some liquidity with salaries expected to come in next week, and they may want to buy some quality stocks. But then there could be some who already have a lot of exposure to the Indian equity markets and don't want to exit for any cash positions at this point.
I think at present, news led by emotions, this is driving the markets. And we are witnessing the same kind of a tendency in the market. Last few days, there is a strong recovery. Nifty went up every day on an average 200 points. Again, it's taken a turmoil. So the markets are volatile at this point of time. If the investor is a very long-term investor, if the investor have a long-term vision of horizon of 3 to 5 years, and he want to make his savings for next 10, 15 years. Just keep the SIPs and buy on dips on Indian markets at this point of time. And it's going to reward the investors on a longer term basis. And the medium to short term, if the investor have a tendency to look at the stock prices every half an hour refreshing in his smart mobile, then definitely it's going to increase the blood pressure. Uh, or else, if the investor is a really long-term investor, buying on dips is extremely crucial at this point of time. And the market conditions, the texture has changed. This is a market where we are witnessing plus 5% and minus 5% on the stock movements are concerned.
Right.
This is the range the stock prices are moving at this point of time. Markets are in range bound, they are in a bearish condition. But one thing, Kartik, if you see the past 15, 20 years of Indian markets, whoever bought on dips, they are extremely rewarded on a medium to longer term basis once the things settle down. So
Absolutely.
we are at the cusp of bear market at this point of time. So one need to have the patience and try to accumulate the stocks on dips and continue the systematic investment plans going further.
All right. So, Kranthi, very clearly telling you uninstall those apps that you have on your phone that help you track your
I'm,
portfolio.
I'm
Don't look at them every 30 minutes.
people to uninstall that, but
Don't
there is no need to refresh every minute.
don't refresh them every minute. Don't look at your portfolio every 30 minutes. And of course, continue with your SIPs and buy quality stocks on these dips. Kranthi, before I let you go, your favorite 3 or 4 picks at a time like this, which are going to be those stocks that, or the sectors potentially, that investors should look at?
Kartik, okay, for a longer term, banking and financial services, they are the epicenter of growth for India.
Right.
So the banking and financial services, large cap banks, it can be private sector or public sector, large cap banks. buy on dips for longer term basis. And also the engineering and consumer companies. Okay, I would be stock specific at this point of time. Names like the L&T, one can try to accumulate. Okay, the stock have witnessed a healthy correction, but despite of the Middle East worries, the stock can outperform on a longer term basis. One can accumulate the quality names and the consumer names, infrastructure names, and the defense names. I can be stock specific here also. The names like Hindustan Aeronautics, Garden Reach Shipyard, Mazgaon Dockyard, Cochin Shipyard, these kind of the names looks very attractive for a medium to longer term basis. One can use these dips for a medium to longer term, Kartik.
So these are some of the recommendations coming from Kranthi Bathini. Kranthi, always a pleasure having you here with us on News9. Thank you so much for your time this morning.